Good afternoon friends. The new income tax bill 2025 has been tabled before the parliament and has gone to the select committee, which would soon give its report, and thereafter it would go for public comments. We have already published a video which you can see on our YouTube channel on the quick glimpses. In this video we will discuss on top 10 amendments and the salient features of the new income tax bill. For a detailed and threadbare discussion, please join our webinar tomorrow 15th of February 11 AM at the link given in this video. So first and foremost, the new income tax bill is towards the objective of making Income Tax Act simpler and more concise. The number of words have been reduced to half and pages have been reduced from around 800 to 600. That has been also published by the government across on the new income tax bill. Now, once the select committee provides its report, then it would go for public comments, and thereafter, very important is that the rules would be published and the forms, the income tax return, tax audit returns, and all other forms including PAN, TAN applications, processes, all of them would change and they would be published. So we should all as taxpayers and as professionals be ready for this change as we go along. The date of implementation of the new income tax bill would be 1st of April 2026. That has been proposed. So first and foremost, a very important change as was expected on TDS and TCS provisions. From 71 sections in the current Income Tax Act 1961, they have been reduced to 11 clauses, and under clause 393 and 394 only, the rates of TDS and TCS have been embedded. A very important change, so to say, is that for all provisions under TDS and TCS in the new bill, the lower TDS or TCS deduction certificate can be claimed as compared to the current Income Tax Act 1961, where lower TDS deduction and TCS deduction certificates could be availed only for select provisions. Mind that the word nil has been removed and only lower TDS deduction certificates can be availed now. So whether the intention of the government is to only provide lower and not nil TDS TCS deduction certificates, that needs to be seen going forward. All the explanations and the provisions in the new income tax bill, they have been done away with as compared to the Income Tax Act 1961, and all the explanations and provisions, they have been embedded in the sections themselves. A new concept of tax year has come, and the age-old confusion between financial year, previous year and assessment year, that seems to have done away with. So from 1st April 2026 to 31st of March 2027, it would be assessment year 26-27 and tax year 26-27 also. So the assessments would be done for assessment year 26-27 and also for tax year 26-27. Assessment year 26-27 would be assessed under the old Income Tax Act 1961 at that point in time, and for tax year 26-27, assessments would be done under the new Income Tax Act, possibly 2026, at that point in time. So this would be an important change and a transitional phase as far as the tax year concept is concerned. Depreciation deduction has found a way in clause 33 in the new income tax bill as compared to section 32 in the current Income Tax Act 1961. Very important word I have used here is deduction for depreciation. As compared to what we have argued in certain cases of section 14A, that depreciation is an allowance and therefore the ineligibility under 14A would not be applicable to depreciation. So, this would certainly be required to be seen as to the interpretation of depreciation for the purpose of section 14A as per the current income tax law going forward, and how it would be interpreted by the courts, it is required to be seen. The provisions for non-profit organizations, they are scattered everywhere in the current Income Tax Act. Now they have been consolidated in clauses 334 to clause 355 of the new income tax bill. The value of ineligible investments, so it seems, would be taxed under the new income tax provisions as compared to the income from the ineligible investments. So, this needs to be further dwelt into. The provisions of non-residency have been kept by and large structurally the same. However, for the determination of arm's length price, the provisions seem to have been tweaked, and the concept of the arithmetical mean for determining the arm's length price where there are multiple comparables, that seems to have been deleted. What comes out in the rules, that needs to be seen going forward. For personal taxation, old regime and new regime, both are there in the new income tax bill also. So, those who have selected old regime, they will continue in the old regime. So, it seems in the new income tax act next year. For manufacturing companies who have opted for section 115 BAB for lower income tax rate, they would continue in the old regime, and those who have opted in the other provisions, they will continue. But the section 115 BAB, that was sunsetted even in the current Income Tax Act 1961, and that sunset would continue in the new Income Tax Bill 2025. All the amendments in the Finance Bill 2025, they have been incorporated in the new Income Tax Bill 2025. However, so it seems that there is a drafting error wherein for certain funds which were shifted or proposed to be shifted in IFSC, that for the position of tax neutrality for shifting of these funds, the sunset date was extended from 31st of March 2025 to 31st of March 2030. So, that seems to not have been incorporated in the Income Tax Bill 2025. So, to this extent, we understand that going forward, the amendments certainly would be made when the Income Tax Act 2026 would see light of day. All the refunds which have been granted in the old regime, all other rights of the taxpayers would be saved. So, there would be no change in the rights of the taxpayers. The CBDT has clarified this again and again. So it seems that most minimal changes is expected other than simplification and conciseness in the Income Tax Bill 2025. But we all know that tax legislations always would be amended going forward. Whenever they are in public comments, they would certainly be again relooked at, and therefore more comprehension and more comprehensive review in the coming 1 year would be required of the new Income Tax Bill 2025. So again friends, for a detailed discussion, please go to our webinar in the link given in this video. Tomorrow 11 AM we would discuss this threadbare. Thank you very much for watching. Do like, share and subscribe to our channel. Stay tuned. Thank you very much.